Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of July 29th, 2013. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your update. Last week we saw Maryland mortgage rates pretty much remain the same as they've been battling this line of resistance. If you look at the bond chart on the screen, you see that blue falling trend line that's making mortgage bonds sell off and interest rates move higher. We've been fighting that trend line. We need to break through that for interest rates to move any lower. If you look, every time we've hit that falling blue trend line, mortgage bonds have sold off, interest rates have spiked higher. We tried to make a run in it last week, sold off, but then we're trying again. Thursday and Friday, some good news. Mortgage bonds were able to close above the 25-day moving average 2 days in a row. That hasn't happened since April. That's a good technical signal. That's some good momentum to make a run at that trend line. So we are going to recommend floating your Maryland mortgage rate to start the week and see if bonds can keep this momentum going and make a run at that blue trend line. Now, next week, there is a lot of news that could move the market, and it could help us or it could hurt us. The first one starts on Tuesday. The Federal Open Market Committee is having their meeting. They're going to release their monetary policy statement on Wednesday. The whole world will be watching that statement. And one of two things could happen. If they mention tapering the bond buying program, which is QE3, quantitative easing round 3, that would be bad news for mortgage bonds. You would see them sell off and interest rates would spike higher. But if they say they're going to continue the bond buying program as is in the 2014, that would be good news. Mortgage bonds could rally and we could see interest rates move lower. Couple other things going on. ADP payroll will be released on Wednesday, and that's going to be a prelude to what's going to happen with the jobs report on Friday. That's huge. Jobs report, if that comes out bad, which we're thinking it might, that would be an impetus for mortgage bonds to bust through that falling blue trend line, move higher, and move interest rates lower. That could help us with this summer rally we're hoping happens. The last 2 Augusts we've had a summer rally and interest rates have moved lower. But we need something to start that rally. We're looking at the Federal Open Market Committee meeting on Wednesday and then the jobs report on Friday. If all that lines up, we could see this rally in bonds. We also have the GDP being released. We think that's not going to come out great either. So all that news, bad reading on the economy, we could see mortgage bonds push higher, and we could see the stock market sell off. So it wouldn't be great for your 401k, but it would help the mortgage bonds, and we'd see interest rates, Maryland interest rates, move lower. In the housing news, we did have some great news last week. New home sales for June 2013 came in, and they came in much better than expected. They surged 8.3% to 497,000 sales. Now, that's a 38% jump from June of 2012. That's the largest annual increase since 1992. New construction is booming. Builders are doing great. New home sites are popping up over Delaware. You're going to see the construction signs everywhere, buy here, buy there. But hey, remember, get yourself a buyer's agent before you go look at those new construction sites. Have someone representing you before you walk in there. But if we look at existing home sales, which came out last week, existing home sales came in lower than expected, and they dropped 1.2% from May to June of 2013. So not great news for existing home sales, but new home sales definitely took the headline news last week. Now, in economic news last week, we saw the weekly initial jobless claims come out on Thursday. That jumped higher by 7,000 claims, up to 340,000 initial claims last week. So we keep seeing this seesaw in the jobless claims from week to week. Gets better, gets worse, gets better, gets worse. So we can't get a foothold in the labor market to see it improving. We need that for the economy to continue improving at a good strip. So that, again, not great news for the labor market. But we did have some good news. Consumer sentiment came out at 85.1. That's the highest reading in 6 years. That's a measure of how consumers feel about the economy. So consumers are feeling pretty good. If you look at the stock market, last week set another all-time record high. So people are feeling good, but we think that might go away next week when we get a reading on the economy. We're probably going to get some bad news come out. Would help mortgage bonds, though. In the local news, the next free first-time homebuyer seminar in Towson, Maryland is Saturday, August 17th from 10 a.m. to noon, and that's at the Sheraton North Baltimore Hotel, right on Delaney Road. You can register for that event by giving us a call in the office at 410-412-3319, 410-412-3319, or you can register online, www.marylandhomebuyerseminars.com. Hey, if you need help getting pre-approved for a Maryland mortgage, or you want to refinance, you want to talk about down payment assistance programs, give us a call in the office at 410-412-3319, or apply online, primaryresidentialmortgage.info. Look forward to seeing you guys next week.